Hey everyone, welcome back to my weekly update on weekly high dividend portfolio journey. Let's address the big elephant in the room right away. The market's been in a bit of a roller coaster lately, with the roller coaster only going down this week. And like many of you, my portfolio has definitely felt the impact. For those of us using margin, such as myself, it can feel especially unnerving, especially if there's no cushion. And I definitely count myself in that group that's a little bit unnerving. But I want to reassure you, and mostly myself, that I've got some conviction and relative protection in place. I'm not going to lie, seeing that 17% drop down there to the right isn't exactly a walk in the park. Nobody likes watching their hard-earned money take a hit, especially in the span of a week. But what's important is to keep our eyes on the bigger picture. So here's the general things that's keeping me overall optimistic. I'm laser focused on the dividends. If you think about it, everyone that is not in dividend paying stocks right now are just feeling the blow and are not getting anything for it. They're not getting paid anything for it. Those that are in just general stocks or only bought Nvidia or only bought Moderna, they're not getting anything at the end of this week or the end of this month. They're just feeling the pain of the market going down. For me, it is all about consistent income. This portfolio is built to generate income. Short-term price swings like we have right now, and this is one hell of a price swing. Do you not see that drop? My goodness. I try not to sweat them too much, even though I'm kind of being hyperbolic at the moment, but it's mainly just for the channel. Those dividends keep rolling in even when the market is down. If you look to your left right here, the confirmed amount that I got paid from January is $1,151, and then the month after that is $927. We have dropped in monthly income to $960, where it was previously, as shown, about $1,000. So we're back in our goal of making $1,000 a month once again after a 17% drop, just mainly because if everything goes down in price, the dividends typically go down relatively speaking. So it's gone down 17%, so I'm expecting at least a 17% drop in our dividends, which is what we seem to be projecting this month. Overall, we should be thinking long term, right? As long as we're not getting margin called, it should still be paying. It's not a get rich quick scheme by any means. It's about building sustainable wealth over time. It might suck that I'm saying we're talking years, not weeks or months. I would love to make insane amounts of money in weeks and months, but that's called mainly gambling. And I'd rather let the experts do the options trading for me than having to pay the price by trying to do it myself. As history has shown us, the market tends to recover even after significant drops. During this recent downturn, I even saw it as an opportunity to snag some bargains. Many of the satellite positions that we currently have in this portfolio were on sale, and mainly what I cared about were the core positions. I took a large chunk in order to buy more of YMAX because it was really on sale. It just kept going down. So I was able to buy more YMAX, increasing that core position, and hopefully it either stays the same, potentially even recover. I don't really bother with it too much. I just know I got it for a good price based on what it's been for the past year. I want to reiterate, downturn is actually a good thing. These are just mindset shifts that normal people that just invest in VU are not thinking about. And if you stick long enough, then it will, as history shows, recover. And not only recover, but grow, as the broad market has shown to have done throughout history. Even with recent history, we've had even larger dips in this, and it's been corrected within the span of weeks or even at most months, right? And funny enough, it also happened within around the same time, around the same season, that Q1 season. Overall, I know it can be pretty tough to stay positive when you see red in your portfolio, but I truly believe in this strategy. I'm committed to reinvesting those dividends and continuing to build this portfolio week by week. And I hope you stay tuned to not only seeing this portfolio pay itself off, but also see the growth and continued dividends that it provides after paying off my initial deposit in the portfolio and onward. As you can see in the Excel sheet right here, we are about to reach 20% payoff. It's only been 2 and a couple months, 2 months and a bit, only been 2 months and a bit, and we are already 20% paid off of our initial sum, getting over $2,000 in the span of 2 ish months with me doing absolutely nothing but just holding and just letting it run, reinvesting and letting it run. Every single payment that has been done since December 13th is in this sheet, even the ones that we're getting currently as of recording today. Sure, the number fluctuates up and down here and there. This payment today of YMAX is closer to something from February 14th rather than February 21. But at the end of the day, it's still consistent income. And when I see this number right here, percent paid off, go up, it gives me hope. It gives me excitement just overall. And it truly can be stressful. And I acknowledge those that feel that potential distress. But the delayed gratification of reaching 100% payout from these dividend paying payout funds in the future will be a far greater of a feeling than any potential distress. I don't know you, but any potential distress I may be undergoing currently due to this downturn, especially if you're not getting margin called, such as myself. If I show it right here, the current, my margin status, my buffer is no longer 50%, so we're not feeling the hottest at the moment. But the fact that we're only 47% after being down 17% gives me a lot of layaway. The market has to drop, as I say again, the market has to drop 47% before they even consider forcing me to sell anything. So the fact that I have this much of a margin buffer and I'm using 70% of my margin, again, if you have a bigger amount than I do, you should probably be using at most 30, which means your margin buffer should be even larger than mine. It should probably be a damn near margin buffer of 70 to 80% in the grand scope of things. But again, the delayed gratification of reaching 100% payout in this spreadsheet, which I will do my best to show you week by week. I may not pop in every single week, but I try my best, is going to be such a better feeling than what we are currently going through, knowing that I just dropped 17%. If you think about it, the amount that I got paid off recently, 19% paid off of my initial balance of the amount I've put in total in this portfolio. The amount that I've put in, it has actually paid off more than I've lost. So even with this insane downturn, relatively speaking, we are still up. So I know I sound a bit more enthusiastic than normal, but I really wanted to hammer home that if you sell now, there's more of a higher chance that you'll regret it and you still feel like crap. Again, my strategy is more based on broad market funds. So RDTE, Russell 2000, the S&P 500, the QQQ, they are covered called ETFs based on those rather than my satellite positions, which are far smaller in total position. They are far smaller. Why? Typically because they have a higher margin maintenance. Thus, the buffer that we have is far less. If most of my portfolio was made up of MSTY, which I think has a 60 to 70% margin maintenance in Robinhood, this margin buffer would definitely not be 47%. I don't know what number it would be off the top of my head, but it definitely would not be 47%. It would probably be closer to 7 than 47 right now. That's all I'm saying. So broad market based index funds that are using covered call and options in order to pay you over time. Very cool that they do it weekly. I don't know about any of the news of the ones that were said to be doing daily, but weekly sounds pretty damn good to me right now. Overall, if you're getting margin called, I would really reconsider the strategy, especially if you're doing like an all-in on a single stock, such as an Nvidia, a Misty, a Murni, a Coney, or even I would probably reconsider. But you're grown. You can make a choice yourself. I'm just doing this to show you what I'm doing. Next week, I'll be back with another update sharing the latest on my dividends and how I'm reinvesting them, and we will see if we can hit that $1,000 goal again, since we already hit it last week. But since the drop, we are technically on track to the 900s in monthly dividend. I want to thank you for sticking with me in this little bit of a mixture of a rant and also a little bit of a motivation, not only for you, but mainly for me, so I can cope in my own way to not sell, because I'm definitely not going to sell. And I'll catch you in the next video. Bye-bye.